All right, all right, all right. Here we are, live and direct. Matt, the Mortgage Guy studio in Sacramento, California. I'm excited to do another YouTube live little Q&A. I know from all the feedback I've been getting, it's been extremely useful. People can jump on, ask real life questions in real time to a real life mortgage broker who's dealing with dozens and dozens of clients day in and day out. So if you're watching this on repeat, the plan going forward, May of 2021, from feedback I've got on my channel, is we're going to do 6 p.m. Pacific Standard Time is when I'm going to start. So tonight's is 5 p.m. I've been doing 5 p.m. Just put out a survey on my channel and asked 2, 3, 4, 5, 6, what's the best time for everybody? Overwhelmingly, it was 6 p.m. Pacific Standard Time, which kind of surprises me when there's a bunch of people in the chat every week that are from, Central Time, Eastern Time. So we're starting 8, 9 o'clock their time on Mondays, but maybe that's when, children are put to bed or the day's wound down, everything else is done. We can jump on here and have good conversations about mortgage, what to do in a crazy market like this, how to, stay sane if you're a buyer, and anything else that you guys want to talk about mortgage related. I've been an open book, and I think that's what's attracted folks to the lives is that any question you have, I'm going to answer it as honestly as I can. I'm not trying to sell anything. For the vast majority of people on here, you're outside of California, so I can't lend to you anyway. And so it's just honest and open discussions on mortgage. I got to give a shout out to my buddy Bot4BS. If you're watching this on replay, and you know anybody who's into Brawl Stars, go check out Bot4BS. In total transparency, it's my kiddo. It's my 12-year-old boy. Ryan, you're doing cool things, man. He's learning how to edit, make new intros and whatnot, and he's doing cool stuff. So go subscribe to Bot4BS whenever you see this, and maybe go into some of his videos and type in, came here from Matt the Mortgage Guy, because he's doing neat stuff. So keep it up, kiddo. Proud of you. Love you. Alexander Lynn, hello. Luigi as the caption. Cool. I don't have anything scripted, anything ready specifically to talk about. I'm just going to ask for questions to roll in. And as I'm waiting for those questions to roll in, I can just talk to what the real estate market is doing, what I'm seeing, what I'm feeling, what my clients are most frustrated with. And this is something that day in and day out, I'm having conversations about, because clients are reaching out to me. Real estate agents are reaching out to me. Matt, what can I do to get an offer accepted? Matt, I've been searching for 3 months. I've put in 9 offers. Nothing's working. What I will tell you is it's not as hard as some people think it is. Sure, it's more difficult, but here's something to put it in perspective. I had a great conversation with a realtor partner who I do quite a bit of business with, and he reminded me that as the sell agent, he gets to see what it looks like on the sell side. As the sell side agent, he recently had a well-priced listing, showed really well, was very attractive to a lot of buyers. He ended up getting 12 offers. Of those 12, he really only had 4. And what he meant by that, and what you can take out of that, is that he's presenting everything in MLS and telling buyers, here's what my seller needs. They need a short close. They need rent back. They need, whatever it is. And it could be different in every single listing. Telling prospective buyers and their agents exactly what they want, and then getting 8 things that are totally different and 4 that are good. These 4 offers address what the seller's looking for, between price, between closing time frame, removing contingencies, free rent back, whatever it is, right? And it's different. So I don't have specifics to tell you because it's different on every single deal, but that's the kind of stuff. Only 4 of the 12 were actually doing that. So that's good news for you as a buyer. If you've got a quality agent who knows how to write an offer, you're in a good position. I wonder how my volume is. Somebody tell me how the volume is, because I'm no tech expert. There. I'm messing with this thing. I probably shouldn't be. Great agent is going to present a great offer. And of the offers that are being presented, I would imagine that on most deals, it's similar, right? Where 33% great offers. Let's look at these and see which one of the 4 is the best. The other 66% didn't listen, never called the agent, Didn't have a lender call and confirm anything. Nothing was done. So if you're in a competitive market and you're going against 20 offers, know that you're really going against 6, because a third of them are written well, good quality agents paired with good quality lenders who are reaching out, confirming that, all that other stuff. So, Junior Acampo, thanks for joining. I am in California. I'm in Northern California in Sacramento, and I'm only licensed to lend in California. If you're outside of California, I have an amazing realtor referral, and I set up something just because a lot of people wanted to get my advice or get my referral to other states. So let me do this. I'm going to put it in the chat. If you go to a landing page I created, greatmortgagebroker.com, fill out a quick form. It's going to ask you what state. If you list California, the 5 or 6 questions it asks, and then you press submit, comes to me. If you press another state, it goes to a lender who's licensed in that state who can help you, who's in my referral network, somebody I like and trust, somebody who was going to take care of you. That's in the chat. I set that up, and it's got like a video from me and a little form. It's super, super simple and easy, just as a means to connect you with somebody who's licensed in your state. So excited I was able to do that, because I just got so many people that were, I was connecting, and it was like, oh, you want to go to Nevada? I'll connect you with Elena. Oh, you want to go to Texas? I'll connect you with Jay. Oh, you want to go to this state? And after a while, I just realized we got to set something up for the 100 people a month that I'm referring to a great broker. And so greatmortgagebroker.com, check that out. You'll be able to get to a great broker in your area. Catherine G, good to have you again. Thanks. You're commenting that my Yeti mic is dialed in. It's got all these fancy things on the back that I think I'm supposed to be on, like the heart-shaped one. There's like a figure 8, a heart shape, a round thing, and then something else. It's for like if you're doing podcasting in person or something. I don't know. I'm no tech expert. Numbers all day. Tech, not so much. Lisa, thanks for joining. Thanks for all the suggestions. No problem. I'm happy to help. You're in the 30-day window by the end of the week, so almost about to lock. All right, where everybody is going to say a silent prayer for Lipsa. Rates are going to hold. They should. I don't see anything dramatic happening. I know the Fed is meeting tomorrow, and so Tuesday and Wednesday they have their meetings. Unless Jerome Powell goes off the deep end and says something wild on Wednesday, rates are going to remain pretty stable and well qualified 30-year fixed conventional loans, good credit. You should be right around 3%. If you're working with a really competitively priced broker, you're going to be lower. If you're working with bank, credit union, direct lender, it might be slightly higher, but for all intents and purposes, around 3% is what you should be seeing. And then somebody's going to call me and they've got a 694 and they're putting down 3% and things like that. And, rates can vary. This is not me selling any rate. NMLS number 1088993. That's that. Any thoughts on locking this week or next? Shoot me an email. Rates have come down a bit this month. You are correct. I mean, we saw them go from mid-ish 2s to 3.25, 3.375. And then over this last probably 2 to 3 week period, we've seen a pretty steady decline. You can see it in the 10-year treasury too. The 10-year treasury goes from 185 down to 156. And usually those things are correlated, the 10-year treasury note and mortgage rates. And so, a lot of stuff being locked in the 2s right now for me and my clients. I like it. I like it a lot. So you're in a good spot, Lips, especially considering with a new build where you, like many, many people I've talked to, were in a position where it got scary, right? Rates had climbed up and it's like, wow, if rates can go from 2.6 to 3.2 in only a matter of a few weeks, like what can happen in the next 5 to 6 weeks? What if they go up to 3.8, 4%, which is not that terrible of a rate, but still when you've seen them as low as we've seen them, it starts to scare you. So, good to hear. If anybody else has any questions, I'd love to just jump into specific questions that can help somebody out, because inevitably you've got a question on here. Other people have a similar question. It's going to help out not just the specific person who's asking it, but anybody else who's either live watching or watching the replay. And what I'd love, this is another request I made last week. What I would love to see is if you watch all these videos and you've got free time and you're going to watch them anyway. If you want to take on a side gig where you're helping me bookmark, then let me know. Just shoot me a message and we'll figure out like what the compensation's got to be. I would just love for it to be, the first 11 minutes, Matt talked about nothing, just welcomed people, said hellos. And then at minute 11, he talked about buying a 2 to 4 unit with FHA. And then at minute 14, he talked about whether I should lock my rate now if I'm closing in 3 months on a new build or whether I should wait. And then minute 17, you get the drift, right? I think that that's really helpful, especially some of these lives that go 2 hours. It would be great for somebody to be able to go in there, look at it, and go, oh yeah, I'm interested in this, I'm interested in that. 2.75. It was a roller coaster ride for sure. Well, you ended up in a good spot. So that's good to hear that you landed at 2.75. I mean, the lowest of the lows without paying points and stuff, we were probably at 2.5. And so you're very near the absolute lowest we've ever seen, which is good. People that locked at 3.1, you're still doing it. You're still doing great. People that get a 3.375 6 months from now, you're still doing great. So I know for whatever reason, people are so fixated on rate when it's not the end all be all. I've got clients in process that are checking rates every single day, and we've locked it and we're great. We're sub 3%. They should forget about that and start worrying about the new house and things like that. But anyway, for another story. Is it possible to close in Indiana on a refi in 10 days? Anything is possible. Very, 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 very unlikely. This would be a scenario, Carrie, where sure, have I ever closed a refinance in 10 days? Yes. Do most of my refis close in 10 days? Not even close. And there's so many different things to factor in. If an appraisal is needed, I would say this is near impossible. If you've got anything at all besides W-2 income, super straightforward file, there might be a submit, get an approval, resubmit it, just a little bit of volume with you and the underwriters. And no matter how good of a mortgage broker you work with or a lender you work with, the process generally takes a little bit of time. And you know what, lenders are not doing as much now, but they were certainly doing last year. When things were so busy that every lender was stretched to the max, they would have different turn times for refinances versus purchase, because you don't want a purchase to take 45 days when people are writing 25-day contracts. So purchases would have different timelines than refinances, meaning a lender tells me, Matt, we'll underwrite your purchases, the initial underwrite when you submit it, we'll get it done in 1 day. On your refinances, it's going to be 3 days. And then when you resubmit that loan, after you've collected conditions from the borrower, it's going to be 2 days on purchase and it's going to be 5 days on refis. And they did this because they know that usually refi is not that time sensitive and they want that purchase business. They want people who are purchasing to be able to close in time. I mean, lenders aren't going to send business to somebody who takes 45 days to close a purchase in general. So long-winded way of saying, I wouldn't count on it. I would say working with the best of the best, you're going to be 20 to 25 days. And if you need an appraisal, no matter how good your lender is, if appraisers in your area are backed up, which like San Jose, San Francisco, lots of parts of California where I lend, appraisers are just slow as molasses, then that could be an issue. Your thoughts on PMI buyout? I would not do this. I would eat the PMI. I mean, depending on what your credit is, and being $6,200, it's either a low loan amount or it's excellent credit, one of the two. But break even 48 months, plan to live there 10 years. What are the numbers if you pay MI for 3 years and then you refinance out of it? Or there's enough appreciation where you can get a new appraisal and have that servicer remove MI. I'd love to dig into this if you want to send me like how much you're putting down, what your credit score is, all these things. I'm generally not a big fan of PMI buyout. Just because people don't stay in their loans for that long. It's the same thinking that goes along with paying points to buy a rate down, paying to buy the PMI out. All this upfront money when, regardless of your intentions, I'm going to stay here forever. I'm going to stay in this loan forever. People just generally don't stay in their loans for more than 3 to 5 years. And so it's going to be a refi. It's going to be a sale. It's going to be something that comes up. And then you're like, dang, I paid that $6,200 up front. Or we see 30% appreciation over the next 3 years. Might not happen, but I mean, it certainly could, right? I mean, seeing what happened in 20, seeing the projections for 21, between now and 23, if your area appreciated 25%, I wouldn't be surprised. You don't even have to appreciate that much. If you bought it with 5% down, it could appreciate by 15%, and you'll be in a position to remove that mortgage insurance in 2 years. So that's why I would probably hesitate buying it out. On the flip side, things could go flat. 2021 could level off. Builders could build 1 million houses a minute. Not likely. And we could see no appreciation all of 22, all of 2023. Again, I don't see that as being likely, but in that case, you're like, man, Matt, I should have bought it out because now I'm paying PMI and I don't have enough equity to refinance out of it, or have the servicer remove it. Boise, Idaho. Heather, I wish I would have. I swear to you, so many people were really bullish on Idaho and Boise in like, I don't know, 18 and 19. I heard so many people talking about Boise, and I should probably use some of the stuff that I hear, because generally it's like I hear it over and over again. I'm like, man, this could be a trend. And then it's like 2 years, 3 years later where it hits like mainstream and now it's a thing. But I've heard some stuff about crazy appreciation in Boise, Idaho. I've got an agent buddy who put me on his drip campaign to show me stuff in the Boise area. So I get like listings of Boise real estate. And it used to be you can move from California because Boise's, they're giving away houses for free. You could buy something for $200 to $225. And now Boise's probably appreciated in some parts of it, like 50, 60% in the last 3 years is my guess. It's wild. So will prices ever go down? It's a great question. This is like the $1 million question, Heather. Everybody wants to know when and will prices ever go down. We've got a bunch of factors working against us. We've got the main thing being very little supply and a ton of demand, and that's just not changing. There's just nothing that's going to fix the supply problem. Builders are, builder confidence is at all high. Builders are building. Their construction costs are higher, so they got to raise prices because of that. And it's just, I don't see, we almost needed a foreclosure wave to level out this market. And I talked about it in a past video where the CFPB said, we're not going to let people foreclose. If I could get into it for 15 minutes, I could explain what they said exactly, but there's going to be avoidable foreclosures where they're going to offer modifications, and they're going to do everything in their power to force servicers. Do not foreclose. Do not foreclose. Last option you have is to foreclose. You have to try everything else in the world, modification, work with these clients before you foreclose. And so I just don't see prices going down anytime soon. Not saying never, but not anytime soon. Just purchased in 2019, only W-2s. I mean, so somebody can close it fast, but I mean, I guess my follow-up question is, why would you need it to close in 10 days? Or are you just asking? Because 21 days is fast. 3 weeks goes by before you even blink. And here we go. A bank says 4 months, which is why you should never get a loan with a bank. Banks are good at things. Mortgage, not one of them. Sorry, banks. Sorry, bank buddies. It's just the truth. Mortgage brokers, mortgage direct lenders that work in mortgage all day, every day, that's all they do, are better at mortgage. What's up, buddy? Is that like a my dude? Or is that a wave? What is that? Back at you, buddy. Remember, guys, subscribe to Bot4BS. Some cool OP Brawl Stars stuff. If you have no idea what that means, don't worry. I'm hip on the kid lingo for Brawl Stars. And that's my guy. Okay. I've got multiple different things going on, and then it's like jumping from one to the other. Credit score 742. Let me see if I can catch up in my own brain. So this is the one we're talking about buying out of the mortgage insurance. Loan amount 364 after 10% down. I fully intend on financing the entire loan. So 364 after 10% down. Watch this math. 400K purchase price. See how good I am? 400K purchase price equals 364 loan amount. 30. Oh, never mind. Look at me bragging. 405. Now I got to get a calculator. I embarrassed myself. Yeah, 405-ish. 405-ish purchase price, 10% down. My thoughts were refi costs about $6K here. Well, ideally, you get a smoking rate. Here's what I would do if I were you. The wheels are turning right now. I would probably, I was going to start to say maybe the rate is 2.875 on a 30-year fixed. Maybe that $6,000 gets you to like 2.625. Maybe even gets you to like 2.5%. And MI on 740 credit, 10% down, that mortgage insurance has to be super low. That mortgage insurance has to be, if I were to guess, why guess? Price this bad boy. If you're working with a good quality lender, and here's the thing, mortgage insurance is different with different lenders. If you're working with a great lender, mortgage insurance should be the best of me. Mortgage insurance should be very little. I'm going to guess like $50, but let's see if see how close I am. Then I'll get to my point. 740 credit. Purchase 405. Thanks for your patience, everybody. We're going to dig in. We're going to dig in and give the best advice. I never know what's coming, and so I'm not prepared with the notes. But in real time, you're getting a glimpse into the brain of a crazy loan officer. $69 in mortgage insurance. So the $6,200 up front, that's like a 100-month break even. I don't like it, dude. I like better 1.7 points gets you like a 2.62 rate. That rate saves you $50 a month. So you're going to pay MI, you're going to buy down the rate, the payment's going to be about the same, but when it comes time to remove MI, now you're $70 cheaper. And if you stay in the house like you plan to, like you intend to, then it's 2 years of the same payment you'd get by buying out of MI because you're paying lower rate with MI. And then once the MI is removed, now you're paying $70 less forever, lower interest rate. That's what I would do personally. So, yeah, that's that. Is there issue refinancing if you're changing employers? Only if you're changing how you get paid. If you are full-time salary and you go from one state agency to the other, or you go from working at one dental office as an office manager making $4,200 a month, and the next one is $4,400 a month at the new office, and it's salary and set compensation, then you're fine. Where it gets wonky and it can affect you is if you go from making a W-2 income to working self-employed or sometimes a 1099 variable thing, where it's completely different. Because if it's variable or it's commission based or it's bonus based or it's just something that the underwriter can't say, here's exactly what you're going to get every month, they're going to want 2 years of history to average it. So I would, just look at that in, how you're getting paid on the new one. Thanks, best of me. Nailed it, 405. It took me 2 times, though. I didn't nail it the first time. I was looking at 360 and thinking 36,000 and seeing it was 36,000 below 400. I didn't get it right the first time, but thanks for the credit anyway. Sold in January, signed a 1-year lease. When should I start looking to get back into the market? Jumbo VA, if sellers think about accepting VA loans again. They do. They accept VA loans. I got a VA in contract right now. And God, I was so close to getting another VA one. I love calling the list side. It's one of my favorite hobbies. And agents know when they submit an offer, CC me, text me, let me know. I'm going to call the list side. I'm going to do all the schmoozing I can. And so I developed some rapport with this list side on something we offered about 45 minutes from Sacramento. And the seller was a veteran and wanted to sell to a veteran. And we were going to beat out other offers until they got like some ridiculous cash offer. So not a happy ending, but I know that VA and the number is like 5% in my market specifically, because I've got Ryan Lundquist from Sacramento Appraisal Blog.com who does some great stats. And VA is still 1 in 20 deals, which is below the usual average for how much VA business is getting into contract, but not 0. So yeah, come on guys, smash the like button. That's what I'm talking about. Nate and Jess, appreciate seeing you guys back here again. It was a pleasure chatting last week. And what do we got? We got 27 people watching it live right now. How many? We only got 8 likes. People are slacking, man. I mean, it's so easy. It doesn't cost you anything. Sitting there. All right, we'll see if that helps things out. I appreciate you guys. Thank you, Michelle. Good to have you on. Real life, real world client. Bought 1 investment property. We're working on another one. Here's the stuff about owner financing, Michelle. I think that there's a lot of good things about owner financing. I don't get to get involved as a broker, so I don't make any money. So when I tell you this, you should know that it's legit advice. It's probably going to become more popular. I've heard a lot of stuff around it. In general, when the market's as crazy as it is right now, people are going to find creative ways to buy houses. And not only do you have people with a lot of equity who want to sell their house to realize that equity, you've got a lot of people with equity who are going to have humongous tax bills if they sell. So here's the pitch, Michelle, if you're talking to a seller, and the angle that you want to take is it might just be that if they do an outright sale and they net $400,000 and have to pay capital gains on it, they're going to get murdered on taxes. And so you say, listen, I don't want you to get murdered, Mr. Seller. I would rather pay you the price you want and work out some seller financing where I'm paying you 4.5% interest for so many years. And sometimes it's X number of years and then, some balloon payment due to them so that you can go get your own conventional financing and they can be out of the deal. Some people, that passive income of collecting on, them becoming the bank and now holding the loan is something that they want indefinitely. And so you don't ever have to refinance out of it. But I'm trying to think of what the risks might be. Maybe the risks are that they offer you, that deal and they say, 450 is our number. You got to pay us 450. We want you to put 10% down. And then we're going to charge you 4.5% interest. But you've got to get out of our loan in 3 to 5 years. And so there's a balloon payment on there, which is risky. Because let's say that something happens with your job. You can't get financing in 3 to 5 years. Let's say the market flattens out. Let's say the market depreciates. As much as I'm super bullish.
I'm having trouble hearing you.
That's my Apple Watch. I ain't even talking to you. And so you can have an issue with financing down the road and not be able to get out. And balloon payment means in 3 to 5 years, the loan comes due and they want their money, or they're going to foreclose on you. And if you've put 10% down, you put $45,000 down and you've paid them payments for 3 years, it's going to not be fun. And I mean, they might be in a position too, if the thing's worth $550 then, that they're like, oh, sweet. We got all this money. We got, instead of rents, because we were renting it before, we got payments from this person who was paying us, seller finance payments. It could end bad that way. So just make sure that you got I's dotted, T's crossed, and if there's a balloon, you've got a clear exit plan on how to get out of it. Should I bring a cashier's check or wire down payment to the title company? Which is safer? I heard this advice somewhere else, and I can't remember where it was. I listened to other content, other folks who are real estate, finance, and all that, because every single email I get from a title company talks about wire fraud, talks about be sure that you have the correct wiring information before you wire off money, because there's so many different examples of somebody wiring $600,000 to the wrong account. So my advice, Simon, is to a wire is perfectly safe. When you go to the bank, call the title company. Hey, it's Mary with Chicago Title. Hey, Mary, it's Simon on 123 Main Street. Just want to confirm these wire details I have in front of me. You have them confirm them, and they match what you have. They are not allowed to send those via email most of the time when somebody's in contract. They're only allowed to do it verbally over the phone to avoid what's been happening, which is hacking into somebody's Gmail. They realize you're in contract. They realize you're going back and forth with title. Then they change Mary Jones to Mary Jones dot at whatever. And you're like, oh, Mary Jones. And they make it look official, the address and all that and stuff. Send your stuff here. Then you take that, you go send a wire, it's going to the wrong place. Talk to the person, make sure it's correct. I mean, because there's also risk to a cashier's check. Take out a cashier's check and then you put it on your front seat and the wind blows it out your window. There's some risk there as well. All right, T, caught a live one. Get in here, ask some questions, whatever you've got to ask. Anything real estate, investing, mortgage related, I'm happy to help. Make it 9. Is this referring to what time we're doing? Make it 9 on the like button. I think it's got to be that. Oh yeah, we're up to 15. You guys are doing your part. Thank you. More life. I appreciate it. Oh, this is a good question. I had Ryan Lundquist, who's an appraiser on, Nicole, and I'm going to do once a quarter with him. People loved him and people asked me to bring him back. SacramentoAppraisalBlog.com. If you want really good real estate information, it's kind of, Sacramento, Northern California based. And so it might not be super relevant to some other markets, but this guy just does amazing job on stats, amazing job in general. And anyway, with him being back on, we'll talk about some stuff like this. It's a function of if you're in a neighborhood where the appraiser has the data to say 3 2s that are 1,500 square feet sell for 300,000, 3 2s that are 1,500 square feet and have a pool sell for 330,000, then they can make the assumption that a pool adds about 30,000 in value. But it's different for different neighborhoods, and it's different everywhere. It's the same thing to be told for solar. Like, are buyers placing a premium on a pool? Are they placing a premium on solar? My real honest opinion for you is that you might spend $60,000 on a pool and $30,000 on solar. And if you sold your house model match without those other things, you put 90 grand in, you might only sell for 30,000 more. So you might only get 33 cents on the dollar for those things. Depending, right? If you're in Arizona and houses with pools are super attractive, I'm making that up. I don't know anything about Arizona, but I just know it's hot, desert. Maybe pools are super attractive and pools sell for 20% more with a pool. So, you spend 60 and add 60, maybe, who knows? But in general, like these type of things for houses, you're never gonna, I shouldn't say never. you're very rarely going to put $1 into a house and get $1 or more back. It's just going to be, I did a 400 square foot addition because my family hangs out in the living room and we get a bunch of value that doesn't have to do with dollars. You get family time. That's why I like the addition, not because, it was going to specifically translate to this number of dollars spent and this much in value. So that's my opinion. I'm sticking to it. Ryan Lundquist probably says it better. Probably could go into more detail about things he's seen through appraisals and how that's shaken out in different markets. Process and risk of buying a foreclosed home. All pictures look good online so far, but I understand it's risky. Yeah, it's don't get catfished, bro. You can have a property that looks good. And here's a quick example. I've got somebody who is in contract to buy this 2-unit property. Good looking deal. Rent numbers look good. They get into contract and they get back either an inspection or the appraisal. I think it was the appraisal because I was on the phone call and somebody on my team said, Matt, go look at page 19 and 20 of this appraisal. In the garage, they had like those big, Persian nice rugs duct taped to the ground, duct tape all around them. The appraiser just thought it was weird and maybe a corner was up, so they lifted it up. Humongous cracks in the foundation all throughout the garage. And that's something that you could have here, right? Is there could be foundational issues. There can be 30,000 in sewer issues. There can be all kinds of stuff. And so I would be very weary of looks good online because you might just get catfished. You might show up and not exactly like their profile pic, if you know what I'm saying. Whatever happened to that show, Catfished? That was a funny one. Me and my wife love watching that show. So yeah, I think you just want to, depending on how far away from you, I know that investor buddies of mine that are buying foreclosed homes are still driving them, peeking in the windows, might jump a fence or two to kind of get a real good feel for what a property's condition is. And then you can eyeball, right? And say, oh, it needs a new kitchen, needs a new roof, needs to do this. I should be able to rehab this for $40K and buy it for X, rehab $40K and throw in some buffer, and it's going to be worth, whatever it's going to be worth when you're done. Can you sell a house in a year with an FHA loan? My guess is you bought FHA. You're wondering if you'd sell it within a year? Sure. And the thing about this question, if it's relating to, you intend to occupy it for a year, which is a common question. People often are telling me, well, what if I want to move or what if I want to do this? Life happens. Jobs come up. Kids want to go to a different school district. You could buy a house FHA and 9.5 months later you have to move. The housing and urban development is not going to come and knock on your front door and arrest you and put you in jail. They just want to know that your intent was to occupy for a year. And then if something changes, something changes. All right, Bill, we got you dialed in with an awesome agent, and I'm sure you're going to get something accepted soon. I'm glad you came through YouTube, found me. We're working together. We got a great team. Like I said earlier about calling the list side, your agent that we connected you with is going to let me know. I'm going to call the list side. I'm going to schmooze them. I'm going to say Bill and his wife are great people. They're netting from their sale in Morgan Hill. They're going to be putting a strong down payment down. They've got great W-2 income. It's going to be a walk in the park, great credit, all that. I'll probably put it more eloquently tomorrow when I'm well rested and I've got more coffee in me. But for all intents and purposes, you got me on your team, Bill. You're in good shape. Thank you for that, Nate and Jess. Somebody who was asking about owner financing, have a real estate attorney look it over. And that's amazing advice. So I thank you for that. And that's for Michelle. Spend the $200 or $300 or whatever an attorney wants to charge you to review documents, because it could save you thousands. So I love this collective knowledge right here. Go ahead, folks. If you've got experience with anything folks are bringing up, then say it here, because I didn't even think about that. And it's a really, really awesome point. If you're doing owner financing, it's a legal contract. And any legal contract that you enter into, have an attorney review it. Awesome advice. Regarding appraisals, since many homes are going over asking, are appraisals coming up quick enough to make a difference? You know what's funny, DJ? I had the video I made about the last 12 offers or last 10 offers, right? I have all these sitting on my desk. So I made a video about like what's getting accepted. And so I like took notes on some of these. Conventional 10% down, no appraisal contingency, 7-day loan. And then I put notes on what it got in contract at versus what it was listed at. I have been surprised that appraisals have been coming in at value. Let me get a specific example. Purchase price, $970. They agreed to go $20K above, but it appraised at $970. That one appraised. Is this the one? This is the one that went $15K above ask and appraised 1,000 short. I'm going to talk to my buddy Ryan about that. What are appraisers? I mean, if you're going to get to 384, get to 385. Playing with my emotions. This one was 105 above ask. And I think when reviewing this, we got a little bit lucky. What happened was we went into contract, went in 105K above ask, and I mean my client. And then 8 days after we went into contract, before our appraisal was done, a comp sold for well above what we were in contract at. And so it helped us and it appraised. So another thing that Ryan can speak to when we get him back on the show is how appraisers are able to use market data and kind of show how things have been appreciating month over month. And it's not going to be like you can show something sold for 400 and then 415, and then you're going to, justify why you're going to appraise something for 440. But you can give a little bit of weight to current market conditions. And I've seen more often than ever before, from just my outsider perspective, being a lender, not really being an appraisal guy, that they're bringing more pending stuff into the fold than I ever saw before. So I don't know, maybe I'm wrong on that. And I'll ask Ryan specifically. It used to be that, most everything on appraisal was closed comps, and then they would shy away from pending stuff. And I've seen more pending to kind of give the full appraisal a little bit more of a feel of what's actually going on in the market. Simon, appreciate you, man. If there's anything I can do to help besides answering these questions, I'm happy to help. San Diego, cool. San Diego is a hot market. I've got a couple clients in contract in San Diego, and it wasn't easy. You got to have a high quality agent. You got to have a strong stomach and be willing to put in some strong offers, because San Diego is one of the fastest appreciating markets. I think it was on that list, right, of home price appreciation, where it was Phoenix, San Diego, Seattle, I think 15, 17%, something crazy. So good luck to you. I have a 685 FICO. Should I go conventional or FHA? That's a good question, Paul. And there's multiple layers to this question, because not only do you want to put side by side, 3.5% down FHA versus 3% conventional, or maybe you've got enough down to look at 5% conventional versus 3.5% down FHA. But there's the rate, there's the mortgage insurance, and then there's also the, what's the word I'm looking for? How competitive your offer is going to be. Because maybe you look at them and you go, listen, FHA is a little bit better looking of a loan for me personally, but if I'm much less likely to get an offer accepted FHA, do I want to bite the bullet and pay a little bit more on my mortgage insurance because I'm going conventional at that 685 score? You might want to do that. And I'm just going to, for fun, I'm going to price out 5% down. People are shying away from FHA financing for a number of different reasons. One of them being there's something in the FHA amendatory clause that allows buyers to back out if it doesn't appraise, even if in other parts of the contract they write willing to pay above appraised value this number of dollars. So savvy agents know that, and savvy agents are like, I'm not risking it. I'm not risking them wiggling out of this contract if we're in contract at 450 and it appraises at 425. All right, I'm going to look this up real quick because I like conforming conventional. Wow, at 680, your MI factor is still only 0.65, which is going to be lower than FHA. The other problem with FHA is that 1.75% is upfront mortgage insurance. You pay it upfront, and it's just a sunk cost. It's just in there. I'd probably look at conventional, especially if you can go 5% down. If you do 3% down conventional, if you're a first-time buyer or you fall in those, home ready, home possible income limits, I bet you the mortgage insurance factor on 3% is going to be higher. So I'd lean conventional, and hopefully you can do 5%. Final answer. It's practically possible. It doesn't usually make a lot of sense. Refinances between lender fees, title fees cost money. And so the only time I've seen it really like pencil is if you're working with a new builder lender who's offering a huge incentive, $7,500, $10,000 in closing costs. And they're going to do that, but their rate is 3.375. I've seen buyers buy huge seller credit or builder credit, and then refinance a month later because they can get a much better rate. The caveat to that is that whoever writes the loan lender-wise is going to get what's called a clawback, where any commissions paid to them are going to be clawed back. Let's say that the lender writes a loan and there's an $8,000 lend from the wholesale broker that they sent the loan to. They pay the broker or the lender, whoever it is, $8,000. When it gets refinanced in a month, they go, give me the $8,000 back. This loan didn't perform. It paid off within 6 months. And so you shy away from it if you like the person who wrote the loan. And I'd be curious too, like, why wouldn't you be able to get the rate that you want in the refi now? There's very few scenarios where that really makes sense. Going into contract for a home that won't be completed until the end of the year. I'm using the builder's preferred lender. See, it's like I foresaw this coming. 10,000 incentive towards closing costs. I'm surprised that builders are still doing this. There's so much demand, they almost don't have to, right? Buyers want to buy these houses, and they're not, like, they don't need incentive to buy them. They're freaking lining up down the street. I don't know. They're not able to lock my rate until 45 days before closing. Huh. That's weird. Most builder lenders have all kinds of 180-day locks and all kinds of stuff, because I've been talking to a bunch of these folks through the channel, and builders lenders are, they've got 6 months until it's done or something. They've been offering longer locks. This is the $1 million question, right, Michelle? All this to say, are rates going up significantly by the end of the year? I don't think so. Yeah, I don't see it. There's tons of different things that can happen. I mean, this week, what the Fed says might affect interest rates. What happens with inflation might affect interest rates. How the economy does coming back, if people want to return to jobs, or if they just want to sit back and wait for some more stimulus to rain. Lots of stuff. I personally, Simon, am a Starbucks guy. You know what I'm even more of? Where's it at? Let's see if we can get in here. My wife, lovely wife, see that espresso machine? She bought me that espresso machine for my office. So I'll make my own coffee around here. I got 3 pumps of sugar-free vanilla and then 2 just lungo espresso shots. Crushing. So first, homemade. It's first choice, Simon. Second choice, Starbucks. There's a Dunkin' Donuts near me, but not a big fan. I used to like just 7-Eleven coffee. Went there the other day. I don't know what's going on with 7-Eleven. Love me some coffee, though. Is this the lender FICO score? Is what the lender FICO score? Oh, when Paul said 685 FICO. Yeah, I mean, the lender's going to pull Experian, TransUnion, and Equifax and take the middle of the 3. It is a mortgage credit pull. So if Best Buy tells you 1 score, if Credit Karma tells you 1 score, if your Bank of America Visa tells you 1 score, none of the scores matter at all. Mortgage credit pull, that's what matters to us. I can probably count the number of times I've been told that's not my credit score. And I say, yeah, it is. For our purposes, it is. Because everybody's got an 800 in their own mind. 800 plus. My co-borrower has 700 and I have a 750. Estevan, excellent question. Hopefully this helps some folks because I get this question all the time. If you've got 2 borrowers on a loan and you're using both incomes to qualify, and so that's why you need both borrowers on the loan, no matter what your score is, they're going to take the lower of the 2 credit scores. So you could be an 820 and your co-borrower could be a 690. Some people have 3 people on a loan and you've got 690, 820, 830. The lowest of the 3 mid scores is what they're using. And when I say mid score, they're going to pull Equifax, TransUnion, Experian for you. So when you say you've got a 750, those 3 scores might be 760, 750, 744. So your mid score is 750. Your co-borrower, we pull the 3 scores. They've got 692, 700, 704. Their mid score is 700. The mid score of the lowest borrower is what we have to use for qualifying, which means your rate and your terms. Sometimes people think that, we're going to take a blended average, or, hey, I'm going to put someone on my loan that's got 800 credit score. It's going to help me, qualify for more and a lower rate. It's the lowest. 4 borrowers, lowest. 2 borrowers, lowest. 3 borrowers, lowest. So when I put your loan in my pricer, I'm trying to get, rate and cost for that rate. It's based on 700. Appraisals are all smoke and mirrors. Majority of them only care to get the bank PMI, all BS. Well, Peter, the appraisal has nothing to do with PMI, because the PMI, and I got this question on another video, and so it's good to bring it up here. Let's say that you're buying a house for $400,000, like somebody was earlier, 405, I think, with 10% down. If that house appraised for $9 million, you're still putting 10% down on the purchase price. You're still paying the PMI based on that. Whether it appraises at 417, 435, 550, or 900 bajillion trillion. So it's not to get the bank private mortgage insurance. But I agree with the first part of your question. I got in a lot of trouble when I told somebody that appraisals are smoke and mirrors, because appraisals are one person's opinion of value on one day based on what comps they pulled and how they calculated how they were going to subtract or add to the value of comp A, B, and C. Comp A is a little bit smaller, so we're going to add $10,000. Comp B backs up to a freeway, so we're going to add some money to your value. And all the factors that go into an appraisal, one person, one day, one value, that may or may not matter to somebody who's going to own or occupy a house for the next 30 years. So that's my 2 cents. Thank you, Michelle. Lower the scores. Backing up what I said. Thanks, Paul. I think that's good too, because I've got nothing to hide. I'll plug in some numbers and give you guys some real-time feedback on what I'm seeing without offering anything. NMLS 1088993, licensed lender, no offers here, for educational purposes only, just some guy on YouTube, all that, disclaimer. They need an incentive for you to use their lender, though. And they do, and I understand it, right? And this is going back to builder's lender. If you're if the builder is giving incentive for you to use their lender, it's because they want a little bit of control and certainty. And I understand that. Let's imagine that all of us were builders and we owned 10 homes all around us that we were going to sell. If I told you that, oh, don't worry, this guy's got a loan with this lender who's based out of Kentucky, this guy's got a loan, some lender who's based out of Detroit, and that's fine, they'll close. And you're planning on selling these 10 homes, and then you're going to take that money and you're going to move your family to another state, you're going to build a compound, whatever you're going to do, right? Like, you want some certainty that stuff's going to sell and close, and relying on 10 different lenders in 10 different states to all close and none of them have issues is a lot more risky than just saying, you know what, I'm going to give everybody an incentive. Use our lender in-house where I can go knock on their door and be like, everybody's good, right? Everyone's going to close. Okay, cool. You did the pre-approval thoroughly. You pulled credit. You did a verification of employment. You did that. All right. Thanks, Johnny, on the spot. We're good. That's what they're doing for all intents and purposes. So I don't get mad about it when somebody's like, yeah, I might use that lender because they're going to give me a $7,500 credit. Well, if I can't beat their loan by $7,500, it makes more sense for you to use them. Can't deny it. What's best for the client? Yeah, only if you use them. And this is something that it's lenders all the time are like, this is BS. They cannot do this. This is not right. I'm outraged. Do whatever they want. It's their houses they're selling. So I just tell people, I'll tell you what, I've given people who are buying with the builders, lenders, some great advice, and we've talked through. I've added value to them knowing they're not going to use me. Guess what happens? 9 months, 18 months, they refinance with me. They send their cousin to come work with us. All kinds of good stuff comes out of it. So I'm not mad if they're using the builder's lender. If you call me and you got questions about the builder's lender and something they're offering you, I'm going to give you honest advice. If staying with them is the best thing for you to do, that's what you'll hear from me, because I've told 150 people that in the last 2 years. Is it worth finishing a basement to add an extra bedroom and bathroom if the entire house is eventually going to be turned into rental property? That'd be a fun, just analysis to do, right? Gosh, I love basements. There's not a lot of basements in California. Where are you guys from? I'd be curious to know, because whenever I see any real estate stuff from other states, I think it's cool. But I mean, for me, it would be the same math I would do. In California, accessory dwelling units are popular. So it's like, if I add an ADU that costs me $100,000 and I know it's going to rent for $1,200 a month, what's my break even? What's it going to add to the value, which is like the net worth number and all that good stuff. I would think if you could recoup your costs in like 5-6 years, and it's going to add value to the home long term, I would probably do it. But that's what you got to factor in. If it's cool stuff I've seen where it's got a separate entrance and it's like a separate unit, and you could do if you could do it that way to where it's like generating extra X number of dollars per month. If it's just finishing the basement and it might rent for $1,600 instead of $1,400, but it's going to cost you, I guess it's still math, right? God, this is fun to do, just real live analysis of stuff. Cool. Lots of the different ways that could go. How does appraisal work for new builds that have appreciated compared to purchase price from last year? It's going to be based on comps, like most appraisals. I'm not sure if you're talking about like your in contract and it's taken a year to build it, or you closed on it, it's appreciated a ton and now you're trying to refinance a year out. But just like a resale home, when you go to refinance, there's going to be sold comps. So you might have bought phase 1 or phase 2. They've sold phase 2, 3, 4, 5, and 6. And now the house you bought for 620 is selling for 730. They're going to see those sales. And that's how your appraisal is going to be done. Nespresso Virtuo. I got no idea. My lovely wife takes care of all the stuff for me. So it's a cool. Yeah, it is Nespresso. I know that. Virtuo. That must be like a model or something. It pumps out some good espresso. It's still hot. We've been going for an hour and it's still hot. It must be this fancy Yeti. Matt the Mortgage Guy Yeti. Look at that. It's cool stuff. My friends had some for their company. I couldn't resist. I had to get some. All right, so this is some more info on our upgrade. Go from 3.2.5 to 4.3.5, finishing the basement. I mean, that'd be fun. I'd probably pull in a realtor friend too and just say, what's this going to do to value? What's it going to do to value? What's it going to do to the rental income? And, if you're like me and my wife, I'm not trying to sell any houses. They're just such cool tax write-offs, such cool little income generators. And so, yeah, if it's going to add to that cash flow every month when it turns into a rental property, and it's going to increase in value in the short term and, long term, something that's worth 300 that you make worth 380 because of an upgrade that continues to appreciate every year, it's going to just appreciate, on a greater starting point, in my opinion. So I like it. Just depending, right? If it's $80,000 remodel, it's only going to net an extra $100 a month. That's different. But if it's 30 and it's going to generate an extra $400 a month, then you might be cooking with hot grease. What is the interest rate today? 30-year fixed, 780 credit score. Little more info, Sunny D. This is the question I get all the time. What's the rate? Do you want to refinance? Do you want to purchase? Are you putting 3% down? Are you putting 30% down? Kick me some more info. I'll give you real life pricing. Yeah, I mean, FHA, it's not necessarily last resort, because for first-time buyers who have 620 to 660, it's light years better than conventional. Conventional is just going to be nasty at those scores. Mortgage insurance is going to be super high. Rate's going to be super high. And so those 620 to 660 FHA is going to be kind of like the clear winner as far as loan terms go. And surprising as it is, in a market like mine that's super, 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 super competitive, FHA is still 10%. So it's still 1 in 10 deals. 13, 14% cash, 10% FHA, 70% conventional, and then 5-ish%, I think, VA. Then you got alternative financing and maybe some USDA that's, 1/4 of 1% or something, but more than I would think in this crazy market. Simon, my dude, this is interesting because I've done more new construction these last few years than ever before. And so let's say you're in contract, Simon, it's closing in August. It's going to be done in August. When we're, 90 days out or something, we get the loan submitted to underwriting, send out an appraiser. The appraiser, even though the thing has got, it's just studs or something, or maybe it's halfway built, however far along they are, can still appraise it and say, when this thing is built and done, it's going to be worth $725. And what they do is they submit that appraisal report knowing that they're going to have to do a reinspection. And a reinspection is called a 1004D. We do that and we tell the builder, let us know when things are ready. They come out and bathroom's complete, kitchen's complete, and they just kind of check off that it's done. But they can, in like a half completed condition, go out there and appraise it based on when things are complete, it's going to be worth this much. And then they reinspect. Then you close, then you're home. Why do underwriters send all their follow-ups piecemeal? This is a great question. And for everybody listening, watching now or on the replay, if you've got a lender sending you one new thing every day for 20 days, you are working with the wrong lender. This is much more likely, Kevin, a function of the lender than it is a function of the underwriter. We are trying to submit a fairly complete package. Underwriting reviews it, approved, back to us. We look at that approval. Here's title stuff. Here's processor stuff. Here's 4 things that we need from the borrower. Super clear, super detailed. Probably going to have at least a couple eyes, my processor and my operations manager, look at it. What are some other things that when we turn this in, they might ask for? What do we might have expiring? Oh, our pay stubs more than 30 days old right? And so once that approval kicks off conditions, that condition list should be it. You get me these 4 things, Kevin, and maybe we add one, right? To be sure that like if they ask this question about it, we're going to have this. Submit it, clear to close, good to go. Sure, there's some instances where there's a little bit of volley. And if you've got 5 LLCs and 19 properties and you're self-employed and things are wonky, it might take some back and forth. But for most loans, we're gonna I think, well, I shouldn't say I think, I know for sure, lenders I send business to track touches. And that's like in, back to us. Into underwriting, back to us. And if you do more than 2.5 touches per file, you doing it wrong. How much do you recommend we have in our savings in order for us to qualify? I'm thinking like 1.9 million is a starting point where you at least got to have that. I tried to tell a joke. I'm sorry. If I was a buyer, here's something that's interesting. In a lot of markets, you're going to have savings just to say, I'm willing to pay $20,000 above the appraised value, or I'm willing to pay $30,000 above appraised value. And so you almost by default in this market have to have a certain level of savings. And so that's already kind of set, right? That there's got to be 30,000 extra in your bank account for that. But let's say that you are in a market where it's not as competitive and things are listed for 325 and you could offer 335. Don't have to write anything about the appraisal. You're putting down 5% plus closing costs. Your 5% on that one is 16-ish. Closing cost, let's say 25,000 is your total cash to close. What I would probably recommend is that you have another 10 as quote unquote emergency fund, quote unquote 6 months of reserves, quote unquote, whatever you want to call it. Everybody's different too, right? If you're working a commission job where your pay changes every month, you probably want to have more of a cushion. If you're working a state job or super stable job where you get paid the same every single month and you know you can depend on it, then maybe less. The more, the better, right? And I think that like a lot of people I talk to nowadays, the best advice I can give is, especially people that are like, I'm saving my money, I'm building my credit, I'm getting right, I'm doing this. Continue to do that all the time. There's never too much money. There's never too good a credit. There's never, too safe, too secure. Just continue as much as you possibly can. And the lender on the average loan isn't going to require any reserves at all, but you should have them, $5,000 or $10,000 at minimum. I think that I've done plenty of loans where somebody needed $13,960 between their FHA down payment and the closing costs that weren't being paid by the seller or with lender credit or something, right? And they have that plus $386 in their bank account. It's risky, right? You don't necessarily want to be in that position where you're stressed out. And when I talk to people and they qualify for $600,000 purchase, but they're looking at 400, I remind them it's an awesome plan. Like you don't want this home to be something that stresses you out, forces you to never be able to go out to eat, forces you to never be able to take vacations. You want a home. You want it to be the dream, right? And I want to be part of the dream. I don't want to be part of the nightmare where you're stressed out every day and like, freaking Matt, the mortgage guy, qualified me for this big old house and this big old payment. And now I'm chained to this mortgage. Not what we're looking for. Huh. Welcome to 2021 appraisals. I posted something, Georgina, and sorry, I know it's frustrating and you're probably not laughing with me at this, but I posted something in a broker group I'm in, and I said, are appraisers across the country a complete shit show, or is it just me in California? And the feedback I got was it's an S show everywhere. And Oregon, I think I heard it's wild and crazy. In certain parts of California, it's decent. In other parts, like, holy moly, it's taken them 3 weeks. They're charging us extra. And so here's what you got to realize. When you have an expected close date, that's the goal. If anything doesn't align with that on the loan, say that appraisal doesn't come in until next Wednesday, you can't close next Monday. And I've unfortunately seen with a lot of appraisers, inspection done 4/6, due to be turned in 4/19. Then 4/19 comes, and I let the appraisal management company know, where is my appraisal? Oh, well, they need this, or they need some more information. Why didn't you tell us in those 13 days between inspected and due to us any of this, right? And so, best piece of advice, call your lender, push a little bit. Hey, I know you didn't get it yet. Is there anything you can do? Can you send a message to the appraisal management company? A lender can't directly contact an appraiser. So that's something that's just a law put in place to avoid any type of funny business like was going on back in the heyday. So I would push on lender and real estate agent. I'm sorry, lender can't contact them, but lender can contact the appraisal management company or the realtor who actually scheduled it. Usually they're going to call the list side and schedule it. Likely has the appraiser's contact info. Hey, we're supposed to close this thing next Monday. When do you expect to turn in the report? And you get more bees with honey than you do with vinegar, however that saying goes. They should be kind and nice to the appraisers who are super busy and overwhelmed. And that hopefully gets the job done. So best of luck to you. Fort Worth, Texas. I like Maverick gas station coffee. Where is that? Whereabouts are you guys from? Did you guys ever answer that? Nate and Jess? But I don't know if we have Maverick out in California. Never heard of it. Oh, see, all my people are drinking the Nespresso Vertuo. I think I'm going to check it after this, see what kind of machine I'm working with over there, but it could be that. These are great questions. I love it when I get these same questions that clients ask me, because then I know it's like, you're asking them here on YouTube. My clients in real life are asking me. And so I know it's a common question. And I had a good conversation with somebody as I was driving home on Friday that was asking me, what do you think about using money from my 401k? And they prefaced it with, I've got 6 figures in there, but I don't want to take out any more than 30% of it. And, it's personal preference. But here's the thing that I told this person. You're going to have some people tell you that the stock market's going to crash. You should pull it all out and put it into a house. You're going to have to tell other people that if you take a dime out, you're a complete idiot. And you're going to have mom, cousin, uncle, everybody's got their own opinion. It's really your decision to make. If it was me, most 401ks will allow you a hardship withdrawal, and they call it a hardship. You're buying your first house is the hardship. Or you can do a loan. And for whatever reason, maybe for me, it's just psychological. It feels less like you're slowing down that retirement train or slowing down that savings train when you take a loan from it. Because you could take a loan of $20,000, pay yourself back with interest. And I guess you'd have to check with your 401k to see if that's possible, see if they offer that. But it's usually a better idea than trying to use down payment assistance, doing less money down program where you get worse rate, worse fees. If you can pull out enough and you've got enough that you plan to pay back via a loan or lumping it back in there, And, let's say it's only 25% or 50% of that balance. And now you're putting 5 or 10% down on a house. I don't think it's a terrible idea. So people will disagree with me. Some people will say it's bad. Don't ever touch it. I don't know. I think that I know a lot more real estate millionaires than I know 401k millionaires. That's my bias, real estate bull opinion. You locked your interest rate a few days ago. Can I cancel it because the rate's going down? Ibrahima. Sorry if I mispronounced that. Here's my advice. You locked it, and you locked it at a 2.94. Once you lock it, stop watching internet stuff, because inevitably, like marketers and anybody out there who's trying to sell you is putting flashy stuff all over the screen. 2.5%, 30-year fixed, 2.625. And those all come with high costs, right? The way that rates have moved since a few days ago is so minute. No matter where you're at or who you locked with, you might be at a 2.96 and rates move to a 2.945. It's going to save you exactly 72 cents a month. So it's not a big enough difference to cancel. If rates changed a ton, most lenders have something where they can float down to a lower rate, but it rarely happens where it goes down that much. I mean, I had somebody who I locked in at 2.96 and they were asking me like, oh, my friend this and 2.75. We looked at it. Their friend at 2.75 was paying a crazy amount of points. And our loan at 2.96 was actually getting a lender credit. And so based on credit score, down payment, that's the other thing too, is that your neighbor who got this rate also put down 30%, also has an 800 credit score. And then you're like, but I've got, he's got better than I do. Well, if you're 720 and you're 3% down, you're not the same rate as 30% down 800. And so that's something to take into consideration. Rates haven't moved that much. Stay put, stay the course. Don't cause yourself all the grief and hassle, end up in the same looking loan. Pros and cons of buying a home with a lease option. The scary part for me, and I'd love to hear Nate and Jess's feedback because they had awesome advice about the lawyer in the earlier deal, is a lot of the lease options I've seen, a couple different things happen. Let's say the house is worth 400 and they say, hey, we're going to give you the option to buy it in 2 years, buy it in 2 years at 425. So there's already a premium placed on it, right? And so it's you can buy it at 425 and we want you to put 10% down. I mean, most lease options I've seen have a pretty healthy down payment because they want to protect themselves as the seller. So now you're 42,500 down. They're going to let you pay them payments. And usually what they do is market rent is 2,000. You're going to pay us 2,400. But here's the thing. You're paying us 2,400 and that 400 above market rent is going towards principal pay down. So you bought it for 425 minus the 42,500 down, plus you're going to pay 400 a month towards the principal. And so you're going to owe us less in 3 years when you got a balloon out of this, or 2 years when you got a balloon out of this. It's, again, going to be a really bad place to be in if 2 years from now the house doesn't appraise for enough to make up for that premium you paid, and you can't refinance them out and get them paid off and actually get it in your name. Or, something happened with your job where you're like, hey, listen, I'm still working the same job. I just don't get a salary. Now I get paid commission. I've been doing this for 6 months now. Well, commission-based job, we need a 2-year history. Now all of a sudden you don't qualify. That seller is like, well, shoot, we've got 2,400 in rent for the last 3 years and you gave us 42K up front. Sorry, you're out of here. And so they're in a good spot and you're in a risky spot. So that's the stuff I would look out for you. Kevin Lee. I have an S Corp and a few rentals, but interesting to know that you can predict what else they may need. Well, yeah, I mean, your file shouldn't be terribly complicated. And the more complete it is up front, like the underwriter's going to have a good scrub and they're going to see all that. They know you're self-employed with an S corp. They know you've got the rentals. They're going to ask the questions they need to ask. It's that second round where a good lender is going to make sure they get everything from you, and then just a little bit of, and I mean, I'm not going to take all the credit in the world. Most loan officers should be doing this. A little bit of foresight. Like if I ask you for a certain document, and I think that document might result in a follow-up condition, we're asking for a child support statement. Well, they might ask for 6 months of payments on the child support. I'm just going to ask for both of them. Things like that, right? Most good lenders are doing that. So you're not going back and forth forever. Sometimes it's not the broker or the lender that you're working with, but it's who they're sending the deals to as well. As a broker, I've got 50 different lenders I can send business to, and 42 of them might be a disaster to work with. We're back and forth 6 times, and they're nickel and diming you like you talked about. I choose to only do business with the best lenders, the best processes, and the best pricing and all that. But for whatever reason, some people like to just cause themselves pain and agony, and their clients get to go along for the ride. I borrowed closing costs on my first home, repaid in 36 months. I say utilize it if repaid, no penalties nor taxes. I say go for it. Is that for lease option or is that just for buying in general? Oh, you're talking about the 401k. See, this is where I got to piece some things together. My brain's not functioning that fast. I think that's to Bravo guy. Should I use a 401k? I borrowed, paid it back, then 3, go for it. All right. We got 1 yay for using your 401k funds. Most loan types aren't looking at payment shock. So you good there. As long as you qualify debt to income ratio wise, should be good to go. Georgina, I cannot say I disagree with you. Appraisals are not only antiquated, but the whole system is not great. They've put stuff in place so that lenders can't work directly with appraisers for a reason. I understand it. They don't want any funny business. Me saying, hey, bro, I need a 475 on this one right now. Yeah, 475. Yeah, make it happen. Thanks, dog. Can't do that, right? So with that, there's appraisal management companies. Got to order through the appraisal management company. Then they send out, I've got 123 Main Street. I need it appraised. Who can do it? To their 70, 80, 100 appraisers on their panel. And then someone's got to raise their hand and go, I'll do it. I can get it back in 14 days. And I'll do it for $475. Right now, all the appraisers are so busy, I S you not. There's orders out there where they're like, if you need it back in 15 days, I can do it. It's going to be $6,300. Like ridiculous numbers like that are being thrown out there. 4,000, 5,000. In my market, I'm not seeing a ton of those, but I've got stories galore from broker pals all over the place. Shanessa, thanks for stopping by. Hello. Let me know how I can help. No problem, that Bravo guy. Happy to help. You got a single family home, owner financed. The lender wanted a 720. You got a 715. And they did it. So I think what you're saying is like the lender wouldn't do it unless you had a 720, and the seller was like, come on down, let's do it. 715, good to go. Six months. You've got 6 rentals. This is something that's interesting too, and I think a lot of people that watch my channel are also real estate investors. As you start getting 4, 6, 8, 10 rentals, financing becomes a little trickier. Not just because you've got a more complex file. But because you've got your W-2 income and you've got rental income, which, let's be honest, most see, this is my point. Before you even said this, I was getting to this. It's hard to finance because you've got those 6 rentals and you've got a great CPA that's writing off everything you can write off. On paper, you break even, and it's a beauty of real estate. And so it's these positions where like some seller financing and some more creative stuff comes into play, and it's really important. And there's some great investors. I know that a guy in my market, Ryan Nickel, is putting together a program that's going to be on one rental at a time. For anybody who watches my channel and also watches Mike Zuber's One Rental at a Time, I talk to him every Wednesday. He posts those interviews live on his channel every Wednesday. Ryan Nickel, a buddy of mine and a buddy of Mike's both, is going to be doing something on seller financing, and it's going to be inside of one of Mike's courses. But getting knowledgeable on seller financing and knowing how that works is going to be a super valuable tool if you plan on scaling it all in real estate. Because like Soren is saying here, 6 rentals, it's harder to finance. And it's because of the fact that you're taking the cash flow from the real estate and putting in your pocket. Because of the tax advantages of real estate, you're not paying tax on it. It's showing break even on your tax return. Writing off depreciation, you're writing off taxes, insurance, and all that stuff. And so seller financing in, like you said, Soren, it is a great tool. You put $100K and you financed 119. Cool. Thank you for being here. Yeah, it's a good topic, and it's a good subject to kind of think about as a real estate investor. Some of that stuff is going to be important moving forward. And another thing that I think about all the time is changes in lending. Lending might be a certain way right now, 2022. If they continue to get more strict on real estate investors, maybe they cap you at 4 properties. Maybe you can't go to 10 properties, Fannie and Freddie, like we've been able to do, because they're trying to write more owner-occupied loans, and they don't want to take the risk of investment property loans. So, yeah, there's that. I was in forbearance and got that seller finance. So you had 6 properties. Yeah, I mean, that's the thing too, is seller financing you less hoops to jump through. Make a deal, write up an agreement, like somebody mentioned earlier. Make sure that a lawyer reads that agreement. That bravo guy. Broker or lender in LA area. I know a guy who's got 2 thumbs and is a great broker in California. If you're looking for somebody specifically who is in LA, you just prefer to sit across the desk, chat with them, let me know. Shoot me an email, Matt, M-A-T-T, at mattthemortgageguy.com. But for all intents and purposes, we can Zoom, we can Loom, we can chat. I do loans all over LA, all over Orange County, all over San Diego, all over all kinds of different parts of California. And, unless there's special circumstances where you need somebody like hyper local, like sitting next to you, give me a holler, Matt, M-A-T-T, at mattthemortgageguy.com. I should be able to help you out. I save the money from loans and that. Nevada? I'll tell you what you can do in Nevada. This one's going to take you to a lender partner. I'll put it back. It's in there, greatmortgagebroker.com. It's going to connect you with a great broker in whatever state you're in. If you fill out this quick form, I'm going to do it real quick on the side here. What state are you looking to get a loan in? Alaska. Would you like us to connect you with a trusted agent? Nope, got one. First name, last name. Every once in a while, I got to go through this stuff to remind me what I've got. what I've got on the site. Phone number, email. I think that's it. I don't want to submit it because I don't want it to get sent to my broker pals in Alaska. But that's it. It's like 6 questions. Fill that out, hook you up with somebody good. All right. Looking forward to helping you guys out. Yeah, give me a call. Regardless of when you're buying, and this is something for everybody, if you're looking to buy, and people always ask me, like, when should I get pre-approved? When should I start talking about real estate financing? When should I this or when should I that? As soon as possible. Let's say that you don't buy for 18 more months. We talk today. You go through the pre-approval process and we say, here's what's going to look like at 700,000 with 5% down and 10% down. Here's what's going to look like at 750. And we go through all that. Trust me, I've got systems in place where my amazing team is going to put together your file. We're going to show you scenarios. We can schedule a call, me and you, and I could talk through everything that you can think of and more than that, stuff that I think of that you haven't thought of about buying. You'll be so educated and ready that when you're walking through open houses on a weekend with your wife, you guys already know this price point with this down, this is going to be the monthly payment. This price point with this down, this will be the monthly payment. Oh, Matt sent me the Excel spreadsheet. If we have to offer 785 on that, go home, ding, 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 785, 10% down. That's what my monthly payment is going to be. That's what my total cash flow is going to be. You will be completely dialed. If you don't buy, all good. I spent $31 on a credit report. You spent some time getting some docs into us. No harm, no foul. You'll be that much more educated and ready for November when you start the house hunt up again, or next March when you guys find out you have twins. You're like, we need a bigger house. So yeah, looking forward to hearing from you. And as you can tell, I start to liven up when I talk about the pre-approval stuff because I like people to get themselves educated, ready, and in a position where it's not a scary thing, right? It's an exciting thing. Buying a house. Cool. I'm going to build some wealth for me and my family and generations to come. Let's go. Can jumbo loan be for 7-unit building? 5 units plus, Rana, is going to be commercial. So as a residential mortgage broker, 1 to 4 units, the space I play in, the lane I'm in, anytime you get 5 units plus, whether it's an apartment building, whatever it is, five units plus, that's going to be commercial financing. And I've got some local contacts here. I don't really have nationwide contacts that I trust enough to refer out. But yeah, know that you're not going to search for the same broker that deals with helping people buy and refinance home loans. You're going to look for a commercial lender. I've seen small banks do good commercial loans. I've seen some credit unions that have some decent products. You'll have to kind of shop around your market, and probably the best place to look is if you're connected with a great real estate agent who works in that space and they do a lot of commercial, and maybe you're looking at a bunch of different, 5 through 15 unit complexes. That agent should know a good commercial contact to hook you up with. Man, I am fading fast. I feel like my energy level on this thing has been less than usual. Shoot me some comments. Let me know if you like the chill, Matt, or if you're like, you know what, Matt, usually a little bit more high energy. You got to bring it. You got to be excited. We're falling asleep because you're falling asleep. Or if you like the chill vibe, maybe I get it from Kyle Seagraves. Win the House You Love. I like that guy a lot. He does good work. And maybe he's like rubbed off on me. Now I'm just chill. Or maybe Mondays are just so hard and so much stuff to do that I've just worn down. I mean, it's a market right now that 85, 86, whatever the number is, where we've got fully pre-approved. They're house hunting, they're looking. I've got all those folks, and then I've got all their agents, and it's pretty unanimous. It's exhausting to be a buyer. And here's some good, what do they call it when you give people advice they didn't ask for? Some advice you didn't ask for. if you're in this real estate market, you've got to have a little bit of grit, and you've just got to be saying, you know what, it's going to be hard, but I'm ready. I want to buy a house, and I'm going to buy a house in 2021, whether it takes 4 offers or 14, all good. The right one's going to come along. The right deal is going to present itself. I'm going to get something accepted when the time is right. And in my experience through working with hundreds, well, thousands now of clients doing mortgage, I can tell you that you're going to have opportunities that come up. You submit an offer and it doesn't get accepted. It hurts for the next 5 days. Next offer, don't get it, hurts. Next offer, don't get it, hurts. Get in contract on offer number 7, and you're like, oh my gosh, I'm so glad. I can't tell you how many times I've heard this. Like, things just happen for a reason. And I'm not like a big spiritual dude, but more often than not, I have clients that are just like, this is amazing. I thought I wanted that first house so bad. I was so disappointed. I remember crying in my shower. I told my best friend that I ate 4 Hershey's chocolates one day. I was so upset. Then you got the house that really was the right one for you. Unsolicited. That was it. Unsolicited advice. Yeah, unsolicited advice. Just hang in there as a buyer. It's not going to be this hard forever. It just can't be. It can't always be this hard. I'm going to dig into some stats in the next few days. I'm going to put some videos out. One, on how the housing market isn't crashing and that half the people on YouTube are just complete idiots and Looney Tunes. But where was I going with this? The other thing that I'm going to do is dig into some stats, because I've heard good things about, 1, builder confidence, and 2, how they track how much builders are building. They call them starts and permits. So if a builder is getting a permit, they're going to build houses. And then start, I think, is like they start building. And so those numbers give you an indication of how much is going to be their inventory wise 3 months, 6 months, 9 months, 12 months down the road from builders. You can't as accurately predict, how many grandmas are going to sell or how many, of these resale homes are going to sell. But at least from that perspective, I'll dig into some numbers and try to get honest advice out there for that, what I think is going to happen, which, if you listen to me long enough, it's like a broken record. I haven't changed. Just like in 2020 and 2019, when I just saw home price appreciation where everybody else saw that things were going to turn around. And I'm not talking about 2020 like, oh, we got lucky because there was this crazy pandemic and it really tightened up the supply side. Like 2019, none of that stuff was going on, and there was still like everybody talking about a crash, and it just wasn't in the cards. The data didn't support it. Things that were happening in the economy and with interest rates and with things that could affect housing, nothing pointed towards a crash. It was just a fun topic to talk about. And so looking forward to making a video, and, as always, a little bit of sarcasm, a little bit of humor in them, just to tell people that the crash is canceled. What would you look for if you're trying to wedge up? Crazy, it's record high. When you say wedge up, you're talking about like a move up buyer? I've heard that wedge term from like Meet Kevin, right? It's like getting a wedge deal. But maybe you're just talking about, you're selling something for 500 and you're trying to buy something for 800. Let me know, Kevin. I'd love to dig into that and talk about it, because there's a lot of people that are in a weird spot right now where they want to sell, they want to buy, but it's a really tough time. Wedge deals. All right, cool. Let's talk about wedge deals. For anybody who doesn't know, Meet Kevin talks about it quite a bit. And from what I remember, a wedge deal is pretty much, you buy a house for 700, you put 30,000 into rehab in it, and it's worth 800, and that 70,000 is the wedge, right? And you can do this in any market. What I would tell you, Kevin, from my perspective, trying to wedge up, trying to find wedge deals are still out there. I'm a real estate investor alongside all of the real estate investors that I work with as a mortgage broker. And the stuff that you want is not the pretty, shiny object that everybody else is clamoring over, because I've seen plenty enough of it where if something is completely remodeled, it's absolutely gorgeous, and it's turnkey ready. That's what the average family wants to walk into, right? Young 35-year-old couple buying their first house, 38-year-old couple with 3 kids, whatever it is, the house that you can walk into like, wow, look at that kitchen, nice. Look at that bathroom, nice. Ooh, this flooring. Ooh, man, I can see myself here. Not have to lift a finger, do anything. That's going to be listed for $500 and sell for $560. What you want, Kevin, and what I want is, look at this piece of shit. This has got shag carpeting. This thing was built in 71. This carpet is from 71. And they've only washed it 4 times. Like, I didn't even know they made wallpaper in this color. Can you, is it supposed to be red or pink? And then it's got like gold trim. Like, just the most disgusting house that most buyers can't look past, where you look at the comps and you're like, wow, pretty house worth 800. This ugly POS selling for 650. Nobody wants to put in the work to bridge the gap, but you do, Kevin, because you know that like painting is cheap. Putting flooring is relatively cheap. You don't need major upgrades to turn this into an $800,000 house. You only need 40 grand. So buy for 650, put 40 into it. Now you've got 110,000 in equity. I think that's basically what you're looking to do. And it's not going to be that easy. And it's certainly not 2013 easy or 2014 easy, but those deals still remain. And if you have a good real estate agent, here's the first person you need to connect with: an agent that's an investor. And really, I would try to find an agent that's like so busy as an investor that they hardly care about their real estate agent license, where they can find deals, they can bring deals to you, and you talk to them about, bring whatever deals you have to me. I'm looking to buy something in the next 3 months, and they can, as they're out there looking and hunting for deals, say, yeah, this one doesn't fit my criteria, but check out this one, or this one, I think this is a good deal. Because I've got agent friends that I work with and I do a lot of business with that help owner occupied. Then I've got investor agent friends. And I'm telling you, they're 2 different people. The agent who's an investor first is able to bring stuff and say, not only do I think this is a deal, but here's why. This is what the comps are. This is how much rehab it needs. This is that. And so, go out and find that stuff, Kevin. Have some fun. From your profile pic right there, use a young dude, way younger than Matt the Mortgage Guy. So you've got plenty of time to go out there and find some wedge deals, depending on what market you're in and depending on your situation. I would say, if you don't own any real estate and you could buy it owner occ, get in there and rehab it, and then move out of it, in a year when it's rehabbed, either turn it into a rental, live and flip that you sell, bunch of different exit strategies, right? But there's still wedge deals to be had. My dude, Mark McDonough, how you doing, man? Tell me, nobody's told me yet if my energy is too low. If you've watched this at all tonight, let me know. I just feel like, I don't know if I'm sleepy. I don't know. Like I had all this energy earlier in the day. Maybe I already let it all out. Maybe all my energy was just spent dealing with mortgages. Yeah, I don't know. Good to see you, Mark. You're doing good stuff, man. If anybody wants to check out like anything near Sacramento, from Lincoln and Roseville and Rockland and Folsom and El Dorado Hills to Elk Grove and Natomas and everywhere in between, Mark's got a video. Coming to Sacramento or the area, subscribe to this channel. Mark McDonough Team, Sacramento Real Estate. He's got all the videos about whatever area you're looking for. Kevin, I appreciate you. 10 out of 10. Let me know, dude. I love talking real estate. So if you shot me a message, even though it's not something that I can deal with personally. If you're in Alabama, let's talk shop, man. I get excited, especially if you're a youngster getting started in real estate. We'll have some good convos about real estate investing, because that stuff can impact you for generations, man. It's fun. Just got approval from the underwriter. Next step, final walkthrough, then sign the docs. FHA in the East Bay Area. See, guys, Damien in contract on a deal in the Bay Area. It's 10% of deals in my crazy, crazy market. The Bay Area is probably not as hot as Sacramento, but still, like, it's real life stuff. For anybody who's saying that you can't get accepted FHA, Damien is living proof. Lender spoke with the seller's realtor so they can be sure the transaction will go through. This is it, dude. I appreciate you coming on. I appreciate the comment, because this is so important that I beg my realtor partners, please let me get involved. Not because I'm the greatest thing since sliced bread, but because like a real estate agent told me on a conversation I had today, when they're talking to their sellers, this is a funny story. The realtor literally called me today and we're talking about stuff, and I'm helping assure him that we're going to close, because then he's got a listing on the house that the sellers are the one that we're buying. My client is going to buy his house. So anyway, he calls me to say, for sure you guys are closing, right? He told me that he's given lenders praise as a real estate agent. And he told me that when he talks to his sellers, oh, you do a great job and this and that. And he reminded them, listen, as good as I am, here's the most important things in your deal: inspection, appraisal, lender. That's where your deal can fall apart. So if that stuff is secure and locked in, dialed in, we're going to get to the finish line. You're going to get your house sold. You're going to get your money. You'll be able to move to Montana, whatever the plan is, right? And so giving the seller assurance through their listing agent by having a conversation. Hey, Mr. or Mrs. Listing Agent, this is Matt, the mortgage guy with Answer Home Loans. Just giving you a call. So-and-so agent put in an offer on 123 Main Street. I'm the lender on the deal. Just want to let you know, great credit, verified income, verified assets in the bank. This loan is going to be a walk in the park. We generally close loans in about 25 days. That's why I told the agent she could write the 25-day contract and remove appraisal contingency here, loan contingency here. Maybe that stuff's waived. I don't know. But general stuff like that, right? Cool. That phone conversation is only happening 10 to 20% of the time. You're already putting yourself at an advantage as a buyer, versus Joe Schmo Realtor doesn't even look at the MLS for the notes, doesn't even talk to the listing agent, just says, hey, you guys want to offer 440? Cool. I'll guess on what's important to the seller. No need to ask. No need to call anybody. Oh, you're pre-approved with somebody out of state? Yeah, I'm sure it's fine. Cool. All right, submit offer. I'm telling you, those offers are like 65% offers. They're backup toilet paper for the sellers. They're not even looking at that stuff. So, yeah, long-winded way of saying this stuff's important. Here's proof of it. Make sure you've got a rockstar agent, rockstar lender. Godspeed. Also good to catch off-market deals through your property manager. They may manage other homes that owners no longer want to rent, decide to sell. This is a great, great, great pro tip. I've got a couple fourplexes about an hour from my house. I've got property manager that literally sends me a deal a week from his network, from they're personally they're managing it or whatever it is, and all kinds of different stuff. People who use property management who don't want to be landlords move to the next step where they're like, I don't even want to deal with property management. I'm just done owning this thing. In California, for me, it can be frustrating as a landlord. And so I get it. Some people are like, cash me out. Just cash me outside. And so, yeah, this is a good one. Good hot tip. Appreciate you guys. If you have a property manager, it's great for them. They've got somebody who wants to sell, tired of being a landlord. They sell to you. You add another unit to what they're managing, so they're getting 8% or whatever they're getting off managing the property. They don't lose it, right? They've got and so they've got incentive there. And my property manager has brought me a ton of deals. I've offered on 2, 0 for 2 in 2021, but don't worry, wife and I keep trucking, keep making offers. Escrow while in forbearance. Does it come due once out of forbearance, or does it get deferred towards the end of the loan? I'm with Wells Fargo. Gosh, this is such a good question. Oh my. I want to have this answer. You know what I did? I'm going to my dashboard on YouTube. I posted a question to ask people about whether or not they have to pay property taxes. I'm going to look for it real quick. Taking forbearance, ? How were the taxes and insurance handled? 20% of people said servicer paid them. 20% of people said I had to pay my property tax and insurance separately. 60% of people said, I don't know. So I would get with Wells Fargo because it sounds like it's being handled differently by different servicers. More than likely, you've got, you're in forbearance. You've got a past due, not past due, but the missed payments of $2,000 per month, principal and interest. Let's say you did it for 6 months. So that's $12,000 that they're more than likely going to say, cool, we'll put that on the back of your loan. No problem. And I've seen that more often than not where that's fine. Your escrow balance, let's say it started at $3,600 and then property taxes came out, homeowners insurance came out. And now that balance is down to $568. What's likely going to happen is every year they do an escrow analysis. And this is common for all lenders where they say, here's what we have in the account. Here's what we project we're going to have to pay out over the next year. There's a gap. And so they're going to say, well, we're short. And they will be if you haven't been paying into it every month. Because normally you pay in whatever the amount is, $417 a month, $522 a month, whatever the number is. You haven't paid it for the last 6 months. So that escrow account is short. 6 months that you took forbearance times the number of months you missed times the number that you normally put in, right? So they're likely going to do something along the lines of that escrow analysis and say, hey, BOJIM, you can pay an extra $250 a month over the next 12 months to shore up this $3,000 shortage, or you can pay us that $3,000 up front and your mortgage doesn't change. You let us know. And that's what generally happens with those, escrow analyses. So that's my guess. But contact them. Everybody does it different. Best case, it was being paid and it got paid every month and they just tack that on to what you owe at the end. The full $2,500 a month is acting like it's being paid a certain amount towards escrow, and then you've got 15 grand tacked on the end. That's interesting though. I'd love to dig into that. I'd love to get some good information on that. I don't know who I'd talk to that could give me, information, because there's so many different servicers doing so many different things. How come it's almost impossible to buy a multifamily house without tenants? I'm guessing that's tenants, not tents. That's a different type of multifamily housing in California. Zeta, I wonder, do you need the rents to qualify? Is that what it is? Because you should be able to have projected rents where they do a rent survey and the rent survey says $800 a month, $800 a month, $800 a month on this fourplex. And then we use 75% of that as income. Yeah. Let me know if you got any more detail on that. Like you're trying to personally buy a fourplex and there's, rents that you can't use. You don't want anyone in the house. Oh, I see what you're saying. Oh, yeah. Okay. So you're trying to buy a vacant multifamily and they've all got tenants in them. No, nobody's leaving right now. Tenants are staying put, especially if they don't got to pay. So yeah, I get you. And it's tough. I mean, there's some out there But it sounds to me like you're trying to find something that's just ready for you to put some high quality tenants in it, and you don't want to inherit anybody. I get that. Generally, the stuff that's being put on the market is landlords are like, I'm tired of dealing with these tenants. I'm out. You take it over. And so that's why more often than not, the stuff you're seeing for sale is coming with the caveat of inheriting tenants. I agree. This question by BOJIM was a golden one. I should take a note. I'm going to try to find someone to answer that question. I'm going to try to make a video on it because it's a good one. A lot of people have that. Forbearance, tax, insurance. How are escrows being handled? Very, very good question. All right. I think we're coming up on the 2-hour mark. This is the final push for likes. We're up to 31. Smash it. Smash the like button. Consider subscribing to the channel. It's all fairly good content on here. Some of the stuff I did in the beginning was trash. If you want a good laugh, go back 7 years. Check out the early videos. If there's stuff that I did 5 years ago that you're like, man, this is a good topic, but you were not as smart back then, Matt, redo this. Let me know. I'm happy to help. But yeah, appreciate you guys being here. I appreciate this back and forth. Next week, I'm doing 6 p.m. Pacific Standard Time. That's what people asked for. 44% of people that I had respond to this post said 6 p.m. was the jam. So we'll do it. We'll do it late night next time, and we'll see what happens. Hopefully we can get up to 100 concurrent viewers sometime in May. That'll be the goal. If you know anybody who wants some good mortgage advice, send them on over and tune in, ask your questions. Let's have some back and forth. Tonight we got more than ever. Some people that were in the comment section answering questions based on their experience, which I love. I'm in a coaching group in mortgage called Consolidated Coaching, and basically like consolidating everybody's knowledge to help out the group is an amazing way to learn and to grow. And so there's obviously some people in the group that have some good knowledge. So I would hope maybe we get you back. Maybe we make this an every Monday thing, and it'll be like some of these real estate meetings I used to go to every week back when you're able to meet people in person in California. And all of us are learning together, chatting about different things to do with real estate financing, real estate investing, and the like. Different perspectives from different people in different parts of the country. Always welcome. We're all going to learn. So I appreciate you. If there's nothing else that comes in the next 30 seconds, I'm out of here. It was a good time as always. 6 p.m. Pacific Standard Time next Monday. We'll be in May, whatever that day is. Thanks for watching. I appreciate all you guys, and let me know how I can help. Matt@mattthemortgageguy.com. One more time, I'll post this link. Where'd it go? If you're looking for a mortgage, looking to get rolling, you're in a state I may not be able to lend in, go ahead and greatmortgagebroker.com. There it is. Quick 6 questions. That's all I ask. Forward you to a great broker who's licensed in your state who can help. All right, guys. Thanks for watching. Appreciate you. Till next week.